Hi and welcome back to Cheeky Crypto. My name's Chris and it's fantastic to have you back with us for another video. And in today's video, I want to have a look at, several different markets. I want to basically talk about, potential, black swan events and stuff like that. What's possible, just expose some risks. And, I would like it to be a really engaging video, so do let me know your thoughts and opinions in the comments below. We've obviously seen, people within government tell us that we should expect a mild recession, and I think that we're going to see something much more severe, and I really want to sort of cover this in the videos. And why do I think that this is really important? I think it's really important because, in my opinion, crypto is a risk asset. It is also correlated with the stock market. And when we see a recession, we tend to see significant pullbacks in the stock market. So I have mentioned a few times that when the Fed pivots, I do expect there to be quite a sizable pullback. And, this is something where I'm not looking at Elliott wave theory. I'm not looking at technical analysis. I'm really just looking at, the markets and trying to look at the bigger picture and try to give my thoughts and opinions on it. And I would love to see everybody else give their views and opinions in the comments below. There is so much to unpack. If you enjoy this sort of content, mash up the like button, subscribe if you haven't subscribed already, tapping that bell, selecting all the notifications so you never miss a video. Jump in the Discord. It's absolutely free to join. Link is in the description of the video. We would love to have you there. There's over 7,000 people supporting one another, navigate this space safely, have some more meaningful conversations with us down in the Discord. Right, here we are, and interest rate hikes, speculation triggers outflows from crypto investment products, according to this report. This is CoinShares, and they're basically saying here, we've got, $72 million worth of funds leaving the space. Now, is this retail money or is this smart money? I get a feeling it's likely to be smart money. A little bit of profit taking, perhaps with the pull to the upside from Bitcoin. But I do think that we should be monitoring these sorts of pieces of information, and that is why I wanted to highlight it straight off the bat. We've got a potential, I think black swan event's probably the way that it could be articulated, and it is actually articulated in this headline. Coinbase CTO predicts black swan event caused by Fed money printing. Digital currency group at risk of 630 million default. So basically, in a nutshell, this stuff is not over. And First Republic is the latest bank failure looking for a bailout. Obviously, it has been purchased by JP Morgan, and DCG could accelerate the black swan event through liquidity, and liquidity is a problem. And I wanted to show this, right? And you can't really see it that well. Let me see if I can. There you go. So just to put it into a bit of context, a little bit of it was hidden behind me. I will share this in the Discord. This was, I don't know who made this, but if somebody does know, let us know in the comments below. This was shared with me, and I thought it was really interesting because these are all of the bank failures, right? So if we go here and we sort of have a look here, 2008, the biggest bank failure was Washington Mutual Bank at $307 billion worth of value. Now, what you can't see, if I scroll out here, is the First Republic Bank is 229 billion. Silicon Valley Bank was 209 billion, and Signature Bank is 110 billion. So I just wanted to sort of basically put this up here so people can kind of get an idea from a visual of what the size of this financial crisis is. I think it's monstrous in size compared to the 2008 crash that we saw, right? So like when I'm saying this stuff around, be cautious, be in capital, preserve mode and stuff like that.
I would like to take just a few seconds of your time to talk about our channel sponsor, 𝗕𝗘𝗪𝗘. 𝗕𝗘𝗪𝗘 is a revolutionary DEX looking to completely reshape the DeFi space entirely. All projects launching on the 𝗕𝗘𝗪𝗘 or Surge Swap will have their liquidity paired with their native token SRG, which is a massive opportunity. Just think about PancakeSwap and what would happen to the price action of Cake should PancakeSwap actually have paired everything with Cake rather than BNB, BUSD, and USDT, etc. I think there's a massive opportunity in SRG, but you should probably do your own research in that one. Now, available on both ETH and on Binance Smart Chain, with over 60 projects currently trading on the Surge network, accounting for approximately about 10% of the total value locked. Now, this pioneering SRG20 smart contract standard basically is internal liquidity pool management through the innovative DEX features, and this is a pretty safe way to apply to DeFi. But it doesn't stop there either. There's also no MEV bots front running you on your trades, which is a massive win. If you're ever using things like KuCoin in your trading, you'll find that there's a lot of front running going on. So it's fantastic to be able to have that level of protection. Everything is built in-house. There are no forks or anything like that. It's got an incredibly talented and dedicated team looking to consistently build value behind the protocol. Now, SRG can be bought and sold via Binance Smart Chain Scan or Ether Scan. So BSC scan and Ether scan directly without contact with ever connecting your wallet to a third-party site, which is a pretty massive thing as well. Now, you can't buy SRG on any other decentralized exchange. You can't find it on PancakeSwap or Uniswap. It is something that you're going to have to go to SurgeSwap for, and I think that's going to really help build the demand behind the protocol. So if you haven't already done your research into Surge, all the links are in the description below. Do check it out. Do your own research. Bear in mind, I'm not a financial advisor and I can't give you financial advice, but I do think there's some fantastic opportunities with everything that is going on here with 𝗕𝗘𝗪𝗘. So why not go ahead and check it out? I'll let you guys get back to your regular video.
It's not because I'm a bear, like many people will, let you know in the comments of many of our videos, that we're bears, we're polar bears, and we're against crypto, and it's really not the case. I'm really bullish on crypto, but I do think that we're going to see a pullback, and I don't want to be that guy telling you to FOMO in at 30k Bitcoin if we're expecting lower prices. And this is something we get. What was it I was called the other day? Arrogant and stuff like that. It's really not arrogance, but I would rather be cautious in a space that is relatively new. It isn't the biggest by market cap when you look at financial instruments, and because of that you get more volatility. And I think that we should be cautious is kind of the points that I want to make in this video, right? So we've got obviously the Washington Mutual 307 billion, then obviously the latest one, 2003 First Republic Bank 229.1 billion, Silicon Valley 209 billion, Signature Bank 118 billion. Then we've got 1, 2, 3, 4, 5. So 3 of the top 5 biggest banks in history have collapsed in 2023. So look, I think we should be taking notes of this, right? We've got unrealized gains, losses on investment securities. Basically, what the governments, in my opinion, aren't telling you. If I zoom in here, give you a bit more of an idea. But look at how much loss these banks are in, right, for some of these securities. And what I want to say is, I think a lot of the banks are insolvent already, and I think we're going to see more and more bank collapses. And you are, in my opinion, not being open-minded if you think that crypto is the answer at this point. And we'll come on to that in a moment, right? Because it is classed as a risk asset, in my opinion. We got Berkshire's 𝗕𝗘𝗪𝗔𝗥𝗘 issues warning for US commercial property market. And again, I want to talk about not just the banking sector, but like real estate and loans. Again, it's going to all compound into the crisis that we've got here. And Warren Buffett's partner cites bad loans again I just think that I'll share this stuff in the Discord. Read through at your leisure. I want to kind of keep the video as short as possible, but we've got to be aware of this, right? The national average office occupancy level is at about 50% roughly, right? Looking at this chart here. Again, you've got all the loans, overall business loans and stuff like that. This stuff just does not look positive, right? If we have a look at the annual returns on bonds, right? What is it? Minus 10.7%. You've then got the rate hikes expose risks in $3 trillion life insurance sector. And this is something that a lot of people aren't sort of taking note of. They're not, acknowledging it. You've got Americans have nearly $1 trillion in credit card debt. And a lot of these people are going to lose their jobs and not be able to fulfill these loans, right? Lord's committee raises concerns about student loans not keeping with the pace of inflation. Max loans 18.5% below where they would be in matched to RPI. What is not articulated in this article is that you're seeing governments write off these loans, these student loans, with debt forgiveness and all this stuff, and it's not good. We've got energy crisis. Europe spends to shield consumers nearly 800 billion euros. Where is the money going? And again, you could argue that most of the energy companies are in soaring profits right now, and they're not passing any savings on. The governments are, and they're shielding us, so we don't really have a good understanding of what's going on and the extent of the crisis, in my opinion. Let me know your thoughts and opinions in the comments below. We got de-dollarization as Zimbabwe central bank to launch gold-backed digital currency for transactions and settlements, but we are seeing a number of countries moving away from the US dollar. Maybe not entirely, but they are moving away. They are using other currencies to basically trade with, and again, we've got to be monitoring this stuff. There will be people that will argue that that there isn't a problem, but 30 years of central bank gold demand, it's up 1,136 tons of gold was bought, which is a record in 2022. Again, we just want to be really, really clear on what's happening, right? Traditionally, when a recession hits, stocks and various other investment instruments take a hit. Gold is normally that one that appreciates. So we should be monitoring what the smart money is doing. Bank of England calls for tougher pension scheme rules after crisis. Again, pension funds are in trouble, right? There's a lot of pension funds. It's not just banks that buy up bonds and they are seen as a good, positive, long-term hold. Other investment companies, bond pensions funds and hedge funds and various others also look at bonds. So we should be aware of this stuff. We should be monitoring it. Again, I just don't think that this is positive stuff. Global debt reaches a record $226 trillion. And we are seeing bankruptcies from countries around the world. There are, the likes of Russia, writing off some debt. China are not at the current this current point. They're just lending more and pausing and putting a hold on the problem. And that is something that could be a really big issue for China. And a lot of people don't talk about the property crisis over in China. They don't talk about, the amount of debt that they've lent out at potentially needs writing off. It would be a big disaster for China, in my opinion. So there's a lot going on. You've got things like this that we're starting to see. Bank closures prompt calls for high street hubs. So this is the next thing in the UK is banks will share a hub with each other, and like Monday might be NatWest, Tuesday might be Lloyd's, Wednesday might be NatWest, Thursday might be Santander, and so on. So really interesting stuff. But I think I wanted to raise this as, you know, just some awareness. I think that, you know, later today we will you know, be on a call to see what happens with the Fed and the minutes and everything there. I think that, you know, the next few weeks and months are going to be very, very interesting. I expect more bank collapses. I do expect that, you know, crypto will be volatile, right, both to the upside and to the downside. But I am expecting, you know, the prices to at least retest the recent lows, or the most recent lows, or even pierce through those you know, recent lows, and that is, you know, going against the current narrative. And I'm not going to just change because, you know, others think differently. I think that, you know, there is still money to be made in this market. I'm not suggesting not dollar cost averaging or anything like that. You know, I am continuing to dollar cost average, even though I think the prices are going to go lower, and if they do, I will invest heavier at those points. Now, if you are a member of our Patreon, you will get to see all of the purchases and all of the sales that Nick and myself make. We list them as we're doing them, so you can keep up to date with all our movements in the space, as well as many other perks, you know, trading ideas and all sorts of different things. So do check that out if that is of interest. Link is in the description. I hope this video was useful, informative, and gives you a bit more of an understanding of the wider landscape, you know, of, you know, events that, you know, ultimately will have an impact both positively or negatively on the crypto space. If you did enjoy the video, mash up that like button, subscribe if you haven't subscribed already, tap in that bell, selecting all the notifications so you never miss a video, and I will catch you in the next one. Take care.